Friends, post budget, we are going to host an event called the Voices of Tomorrow. This event will be digitally streamed and it will be on our YouTube channel, I Thought Advisory. It will be streamed live. So go subscribe to I Thought Advisory, fill up the form in the description link and give your details so that we could send you the link which you can use to watch the live streaming of this program. A very interesting session awaits you on 4th of February and we will know what to do after the budget, where to invest in Indian equities, should we invest globally in international markets, and is it time to look at debt? Thank you for being of support to us and see you on the 4th of February in Voices of Tomorrow. Friends, in this video for I Thought Advisor, I'm going to talk to you on the topic, what does the budget offer us? The budget has been presented, the markets seem to be rallying in relief, and this was a budget where not much expectations were factored in, and given the fact that expectations ran so low, this budget seems to have not done much wrong. In fact, it has got quite a few things right. First things first, the budget is very strong on investment. Investment in this budget is going to be 3.3% of GDP, which is the highest in a very, very long time. Investors generally don't like budgets which are low on investment, but this budget is the highest in investment in a very long time. If you compare the numbers pre-COVID to now, it's a paradigm shift. The good news in this is there can be no looking back. After the elections, we still need to take this forward. There's no going back, which means that we are in a investment super cycle as far as public infra investments is concerned. That's the biggest highlight of this budget. I was thinking the government would spend about 9 lakh crore this year, but the government is spending 10 lakh crore, which is much higher by 1/3 over what they spent last year. The revised estimate for last year is 7,30,000 crores. So 10 lakh is a huge jump up. That's the significant highlight of this budget. Everyone would want to know what's in it for us. If you're a taxpayer who's in the highest bracket, then your taxation rate goes down from 42 to 39. In my opinion, 42% was ridiculous taxation, and it's good that better sense has prevailed and the tax rates have been moderated a bit. On the personal income taxes front, for the people who are joining work, who are getting into careers, who are in early stage careers, there is some tax relief. Earlier, you were forced to make investments to get tax relief. Now, up to 7 lakhs, you don't pay taxes. So that's a very positive thing. But it also comes with a lot of personal responsibility on your side, because you need to make sure that you invest for your future. So the onus of saving and investing now shifts to the individual. The system is not forcing you to do it. Also, you need to make sure that you're covered with insurance, your term policies are adequate, and you also provide for some money which is directed towards your retirement. So a lot of things now shift to you. So that's one thing. But putting more money in the hands of the taxpayer is a welcome move. It's in the right direction, and I do hope that in the coming year this further gains momentum, because I still think that somebody should not pay taxes till they earn 10 lakhs per year. So 7 lakhs is still way below what I think is a fair target. On the overall management of the economy, the government is progressively getting better. We have fully recovered from COVID. The economic damage of COVID has been repaired. So now it's time to grow. Growth should be muted this year when compared to last year, but it would compare favorably with the rest of the world. Also, our deficit, which should be 6.4% of GDP this year, where the finance minister has expressed confidence that she will meet what she targeted, will move down next year to 5.9%. Remember, we still have a few years to take it to 4.5% by 2025-26. So every year your fiscal deficit has to go down by 0.4 to 0.5% if we are to go comfortably towards that target. The minister has expressed confidence that she will grow the finances of the country while at the same time keeping the deficits down without compromising on public investment. That's a nice balance overall. But for the capital market, there was nothing outstanding. There was nothing out of the ordinary. And all the usual sectors have got their full allotment and there's not much reduction in any place. So this budget has hit all the right buttons. It is growth oriented, it is disciplined, and it is promising growth with continued discipline, which is a very, very simple, straightforward but strong promise for a government to give. So in that sense, this budget will do long-term good, but it has nothing to excite the stock market about right now. So factor that in, and if the stock market responds irrationally due to any other global factors like US interest rates or any other event around the world, make sure that you use those opportunities to continuously invest, believe in the Indian economy, and scale up your exposure to equities. That is what I would suggest to all of you as a key takeaway from this budget. Stay confident, be composed, rest assured, the journey is set for a long haul. Thank you very much.